So you've probably read the blogs and listened to the videos of most of the major influencers talk about how they think there's going to be a major real estate crash in 2021, right? And most of the arguments boil down to a couple of factors, including the fact that, the Fed's keeping the interest rates at a historically low level, which is not great, plus everything going on with the forbearances. And there's a lot of predictions essentially saying, yeah, I think 2021 is going to be a major crash. Don't buy real estate right now, yada, 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 right? And look, I'm not making this video here to regurgitate all those arguments and bring up all the data and everything, because you can go find that on other channels. But I do think it's very similar to basically the same cries, the same cries I've heard for probably the last 5 years, honestly, since I've been in the business of 2016, that the market's overvalued, that it's going to crash. And I've literally heard every single year of someone saying, yeah, 2017 is going to be the year. Yeah, 2019, something's going to crash. Yeah, 2020 definitely is going to crash. And I think this is just another one of those times where there's a lot of hype out there about potential crash now with COVID going on and everything. And I'm not really convinced it's going to happen. I think all of that content's really more out of hype than anything real. So I thought I would make this video to talk about my thoughts about that, as well as talk about under what circumstances you should potentially consider buying real estate today, and truly some circumstances you should probably pass on. So with that, let's get at it. What's going on, guys? My name's Lior, and I'm a real estate investor out of Boston. And as I said, I'm really excited to make this video because there's just been so many videos on YouTube and so many blogs about talking about this major 2021 prediction of the housing market going to crash, which like I said, I've heard so many times. But before I get into that, one quick thing, guys, if this is your first time on my channel, make sure to subscribe to me. I put out lots of new videos every single week. And if you guys subscribe, it just helps me put out more content. And that way more people can really benefit and hear from other opinions beyond the mainstream. So let's start with this. As I alluded to in the intro, I got into the business in 2016 and I bought my first multifamily property then. And I remember literally every single person I knew that I told I was buying real estate, they were like, "You're crazy. We just went through a major market growth. So there's no way the market's not gonna crash this year or next year." And then I jumped into more projects and more, and every single year since literally 2016, I've heard someone make an insane prediction that all hell is coming loose, that the housing market's gonna absolutely crash, and you shouldn't touch real estate. And look, I'm not gonna sit here on camera and say, I don't think the market's gonna crash. Is it gonna correct? Yeah, it probably will correct at some point. Honestly, in Boston, I already see a little bit of a correction. It's not major, it's a couple of percentage points and it's a weaker market, but that's beyond the scope of this video, right? I'm not gonna get into semantics of whether I think it's gonna crash or not. There probably will be some correction, but I think regardless, whether there will be a major correction or not, or whatever it is in the future, we don't know. And if you're not actively buying real estate today, I think the biggest thing you're missing out on regardless is time. And here's what I mean by time, right? I bought my first piece of property in 2016, and I can tell you this, there's nothing I've done since then that has generated me more money on a single acquisition or a single kind of, deal, whatever you may want to call it, right? Just because the amount of time that has passed, right? I mean, it's been probably about almost 5 years now. And with that time, the equity has just grown really, really well. Now you can say, oh, it's, the market's been going up, You can make all sorts of arguments for it, but at the end of the day, time is gonna be your best friend, right? And I think most big investors and, even icons like Warren Buffett and all of them, right? They all have very similar mentalities, right? That if you buy basically anything that's even semi-solid today and you sit on it long enough, right? You're gonna probably do okay, right? Because time is really what dictates the success of an investment, right? You can basically, time allows you to ride out any potential storm. It allows you to ride out any potential hiccups. And because over the grand scheme of say 5, 10, 15, 20 years, right? Most things tend to appreciate in value if bought correctly. It's really when we try to do like day trading, right? When we try to day trade stocks, maybe trying to day trade Bitcoin, you can certainly day trade real estate by AKA flipping, right? It's only when you get into these real short-term acquisitions, short-term transactions where you're kind of betting on a lot of things, that's when you can really get stuck holding, something pretty sour. But if you're going to basically go in with any real estate transaction and say, look, I'm going to buy this today. I've got a 10, 15 year timeline. I don't care what happens for the next couple of years. I think it's very, very hard to see a way for you to lose on that. Again, as long as it's soundly bought, right? And I hear this from every big landlord, every single big landlord I know that owns tons of property and is worth millions, if not billions, right? They just all kept buying real estate, bought real estate slowly and over again. They went through different market cycles. They went through the different market crashes. They went through the dot-com bubble. They went through the '08 recession. They went into recessions in the 90s. And they're still here and they're still making a killing. So I think time is absolutely the biggest thing you're missing out on. If you keep listening to all of these hype prediction videos about how the market's going to turn sour and everything is going to be 20 cents on the dollar next year. Now, in terms of real estate specifically, of course, right, there's a couple things you do need to consider if you're going to use this strategy, right? This strategy, sitting on a property for the next 10, 15 years or whatever it is, assumes that you can essentially float the note without going bankrupt, right? That's a pretty big assumption. So on investment property, let's say you're going to buy a rental property, you obviously need to make sure that the rents are very strong, that they can support all your debt service, they can support all of your maintenance, your repairs, your property management, and all that fun stuff, right? I made other videos covering that. But basically, you need to make sure the numbers are very sound and the fundamentals are there. And if you're going to buy a primary residence, I think the same concept applies, right? You need to make sure you're not overstretching your budget today, that you're not buying something completely out of reach that's going to squeeze you on a month-to-month basis, right? So if you can buy something that's within budget, within reason, that you can afford more or less relatively easily, right? And if something were major to happen, you could still float your mortgage without any issues. Again, if you can do that, and sit on that property or properties or multi-units, whatever it is, for 10, 15 years, whatever it is, again, I just don't see how you can possibly end up losing by doing that. Not only that, right, but the other thing to consider too, if you buy property, let's say in the next half a year or a year, you can also actually take advantage of these historically low interest rates instead of being scared of them and signifying that they're gonna, lead to some sort of disaster, right? Because if you can take 30-year debt today at these like historically low rates of, I know I have people getting rates in the twos, like low twos, 2.5%, up to 3% on commercial deals, 3.5%, right? If you can lock yourself that kind of cheap debt for the next 30 years, I mean, the amount of pressure you're going to feel on a financial basis is going to be a lot lower. You're going to be able to ride out any storms, whatever happens, right? So make sure you actually do take advantage of these interest rates. Again, rather than trying to like fear them and, be scared of touching them because, maybe it can lead to something, right? If you lock that in today, that debt is locked for you for the next 30 years. So again, if you have to sit on that thing for 30 years, whatever, that's your worst case scenario. So what are the things I wouldn't do today with real estate? Well, you probably would have guessed it, but I probably wouldn't go flip property today unless you're an absolute expert and that is literally what you live, breathe, and eat, right? I think flipping, especially for novices or people that don't do it a lot, is insanely risky today because you are kind of at the mercy of the market, right? The market has been insane the last half a year to a year. There's been a lot of shifts. There's been a lot of demographic shifts. And you're kind of playing a little bit roulette by going to flip, right? Because you're probably taking on very, very expensive interest rates for loans on the construction side. And if you get any delays, if the market shifts in any other significant way, you can't really ride out a 12% interest rate note for, that long, right? It's going to sink you pretty quick. And same thing if you're going to buy a property that you think, you're going to flip for 50 grand next year or 100 grand next year. Those are the ideas I would probably put on the shelf today, right? I think if you're going to be buying real estate today, you got to have a long-term outlook, right? If you can have a 5, 10, 15-year outlook where you're basically buying a piece of property today, and you're just going to sit on it, I know I've said it so many times, I just don't know how you can possibly lose by doing that. So if you're someone like me, right, you've got a long-term vision, you're not going for the get rich today and you're not trying to short the market or flip a home for $250,000 or whatever, right? If you've got that vision where you can play the game for a longer period, right, go lock that debt in, go get that insanely low rates, right? Buy a piece of property in a good market, buy it at a pretty good price and then just be patient, right? Sit on it as long as you have to. You'll be able to leverage it down the road anyway, but just buy that, and I'm sure in 5, 10, 15 years, your future self is gonna be thanking you. So that's all I got for today. If you guys have any questions, shoot them below.